Here I am again from beautiful Annecy in France, however, with a bad studio. But I hope that you will like this new microphone we got. Bought it here in France. I hope it will make the quality a little bit better. What are we going to talk about today? Well, I did promise that we were going to talk about maybe the top 10 coins that we're going to go buy, but I think that now is not the time. I think, in fact, what we have to speak about is that blood is soon going to be on the streets. Now, we did agree on, you and I, remember? We did agree on that we will buy when there's blood on the street. It was not Warren Buffett who said it, now it was Rothschild. However, when there's going to be blood on the street, that means we're going to see casualties, as we have seen already with UST. And you know, number one, no one, who was me, sometimes not. I did also take a hit with my stablecoin diversification. So in order to prevent future casualties down the line, because I do believe that we're going to see more blood on the street, I actually think that we've only seen the beginning of the bleeding. I wanted to make a video where we perhaps talk about how to protect ourselves, how to prevent being exposed to other casualties. So I want to talk a little bit about the market overview. I want to give you some advice or, share with you what I'm doing in order to go very defensive into the future. So let's get going, because I know you're my lion. So, as you know, I try to do these little videos more like the streams we do. I think what we have to take into consideration first, or talk about, debate just slightly a little bit, and bear with me, is, are we talking about stagflation or are we talking about hyperinflation? Because I think that both of you and I, we can agree that inflation is all around. So I was myself also trying to evaluate, are we seeing stagflation or are we seeing hyperinflation? I actually think we're seeing a bit of both. So let's first jump into stagflation. Jump in, huh? That sounds like something fun. Not that fun. Stagflation actually refers to an economical condition where growth is very close or stagnant. However, prices are rising. And we are seeing that, right? So the side effects of stagflation are increase in unemployment accompanied by a rise in prices, or in inflation, right? We are seeing price increases. Let it be due to the supply chain mismanagement. Let it be to geopolitical events such as a proxy war that is taking place in Ukraine. However, stagflation occurs when the economy isn't growing, but prices are going up. Let's talk about hyperinflation, because that occurs when prices, they're skyrocketing by more. That's what they define it by 50% per month. Now, we know we're not seeing more than 50% per month, but we are heading towards more than 50% per year. And I think it could actually increase quicker and quicker and quicker. So it might end up with 50%. Even if we're going to have, 100% per year, that's still very bad. And that's why I said I think it's a combination. However, it is very rare. In fact, most examples of hyperinflation occur when governments print money to pay for wars. That's a good example, right? So examples of hyperinflation include Germany in the 1920s and our good friend, a nice country, and I have heard it should be nice this time of year, Zimbabwe in the 2000s and Venezuela in 2010. So that's why I think that if we look at it, I think it is a combination of stagflation and hyperinflation, right? Because we are very much seeing the governments print money like there's no tomorrow. We don't really have a war, but we created a war. We needed a war, right? So we got a war, so we can print. Furthermore, don't forget those ugly, ugly cronies, and now war. Reason being is the government needs a Black Peter, the blackjack. Blackjack is maybe a good thing, but in German, Black Peter, we need to blame somebody. So let's blame the cronies. Let's blame the war for the fact that we are seeing inflation at a price or at a pace that we are. Now, another thing that I also want to point out is that we are saying that we are seeing inflation mainly in energy, which is very much the blood line of the economy. That is because of Russia. Well, I think we are forgetting that the United States of America have a lot of oil. They just don't want to touch it. They don't want to extract it. Anyway, let's jump on to something that is a little bit more crypto relevant. Now, we got here Glassnode, and we can see that with the recent crash down to 20,000 as we were expecting, we are seeing that we have 67% down from its current all-time high. But that is still not as much as we have seen in the past, namely in 2019, 2015, and in 2011-12. Now, if I'm not exactly right, it's because I have such a small computer here in front of me, so I can't really see it all. I did want to point out, if we look into the Dow Jones, right, we need to compare because there's a certain amount of correlation taking place as we speak. So we saw Dow Jones back in the housing bubble go down around 54%. We can see that there. I made a nice slide. However, currently we're just about down 20%. Now, if we are in fact, and that is what I believe, we got all the ingredients to make a massive depression, right? It's like when you want to make a nice Bahama Mama. Remember, you need oranges from Valencia. You need the fresh ginger. I don't know from where that comes. You need a tonic with lots of sparkling, lots of carbon dioxide. And you need, obviously, a premium gin. Don't forget, the ice cubes have to be ice cold, stone cold, like Steve Austin. So, when you got all these nice ingredients and you can mix them together, you can compound them, then you got the ingredients for a perfect Bahama Mama. And what we got right now is that we got the ingredients for a perfect crash. We got the geopolitical tensions. We got war. We got the printing of money. We got the pandemic, monkeypox. Remember, my wife says that I have a monkey brain. I don't know if that's a compliment. But we got all those ingredients. That means that I think that the 20% that we are looking at here is nothing if we compare to what is to come. And I want to point out here from 1929 to 1932, when we actually saw the Dow Jones go down 72%. So if you would have invested $10,000 in September the 17th in 1929, and if you would ignore dividends, it would have fallen in value to around 2,500 by mid-1932. So that's roughly around 3 years of bear market. However, it's not really the 3 years of bear market that you have to take into consideration. 10 years later, that 10,000 would only be worth 6,000. And that is why it is so important that what we are doing here is that we are averaging in, not at the height of the market, right? We don't buy high and sell low. We buy low and sell high. And that is ultimately really important. So just to touch up on that, it would have taken anyone who invested in 1929 there in September more than 20 years to recover. Now let's jump in and look at the NASDAQ. If we look at the NASDAQ now, after the dot-com bubble, it was down 78%. If we look at where it is today, it is down 34%. I'm just pointing this out because I do believe that there's so much more downwards momentum. That's why I believe in the 12,000 BTC. Now, we're basically getting at where I wanted to get today. And what is that I want to talk about? Not about staking, but I wanted to talk about how I am preventing and how I am going about it. I don't have a right slide. I hope you bear with me. What I'm doing currently, I'm taking all my money out of centralized exchanges, all of them, right? Because we saw what happened with Terra, and I don't like the tricks that we have seen until now, where, you know, if there's a certain run on a certain specific coin, all of a sudden you're not able to take out your money, take out your coins from that exchange. And Binance, they have pulled that trick pretty many times. KuCoin as well. So what I'm doing right now is I'm taking out all my coins from the centralized exchanges. Now, I also did, and this is more specific, but I did invest into Insure Ace, right? I think Insure Ace is a good protocol. I said that the risk reward is currently, if we would ever see Insure Ace go up to its former all-time high, it would be around 15,000%. However, I also did take a hit because I was staking there. I was staking my good coins, and because of the UST crash, I took a hit on my stable coins there, 25%. Now they want to lower that down to only 10%. I took a decision to take out what I had. I took a loss of 25% on my stable coins. However, what I did is I actually increased a little more Insure Ace tokens, because if it's gonna survive this specific market that we are actually going to face, because I believe we are only in the beginning. I think if we're going to see an upturn, it will be, as I said, a bear party or a dead cat bounce. So I'd rather take them out, put my stable coins on my ledger, maybe not even earn any percent at the moment. I don't care about that. $100,000 stable coins are 100,000 stable coins, right? It's better than putting in 100,000 stable coins thinking that we're generating 15% interest only to understand we lost it all. You get my point, right? So it's being like double safe. So that's what I'm doing. On the other hand, I bought a few Insure Ace. So what I want you to take out of this video is get your money out of the centralized exchanges. Put them on your hard wallet, right? Hard storage wallet. Forget about the market for a while, unless if you are a day trader, a minute trader, you go watch Traders Reality. But if you are like me, we participate in the downwards cycles, but also in the upwards by when they go up, we average out. When they go down, we average in. We are still the undisputed #1 channel when it comes to crypto. But we got to be safe. There's a lot of things around the world that don't make sense anymore. The supply chain mismanagement, from my point of view, is orchestrated. We didn't need to see that. We didn't need to see the high gas prices. We didn't need to see a proxy war. I want to point out another thing. America alone have provided Ukraine with $40 billion fine US dollars. Take that into consideration and you calculate the cost of building apartments in Ukraine. You could approximately, for that price, have built, I think, more than 4 million units of apartments. Damn, it sounds like a lot, right? Maybe you can come and argue with me that that is too cheap or too expensive, but remember, Ukraine got lots of land. They got lots of sand. When I say sand, they got lots of, beton, so you make concrete, build. Very cheap for them to build apartments there. So instead, we are seeing the negative effect of a proxy war. We're seeing a country like Ukraine that really was poor prior to the war. Now it's even much more poor, because remember that 40 billion, it's a guarantee. It's a guarantee of a loan. It's a credit. So imagine if we would have gone to Ukraine and said, hey, you can have these 40 billion, you can build infrastructure, you can build apartments, everybody can live good. But no. That 40 billion, just from America, we're not even talking about from NATO, we're not talking, forget about NATO, we're not even talking about the EU, we're not talking about all the help they're getting elsewhere. It's going to come at a price. For 40 billion, they could have built a lot of apartments. Now, not only are they not building apartments, not only are they taking a loan and a credit, but imagine how much infrastructure is being destroyed for a war that we did not need. But hey, what do I care? I'm in beautiful NSC, gonna go on the bike now, go out and enjoy. I hope you will so too. If you're new to this channel and you have been around for this long, please hit like, smash, subscribe. I'm gonna be hopefully back in Ukraine on the 25th. Pray for me on the 24th. 23rd, I'm sorry. I will go to court for the second time. Hopefully win my children back. I have one twin in the right pocket, another twin in the left pocket, and my daughter in the back pocket. And who knows, maybe the mother of my children would want to come too in the last pocket. Who knows? Nevertheless, that's not so important for you. And most important is that we can do some live streaming. They are surely exciting times. In fact, as Simon Dixon always says, we are living in the most exciting times in our lifetime, perhaps in many lifetimes. It's not every day that you get to discover, to be a part, to experience, to live through a monetary renovation, readjustment. I don't know how to say it in English. We're seeing that. The ones that are smart, the lions like you and I, we will profit from it. We will benefit from it. We will tackle it. We will make it ours. And that's all I got to say about that. As I said, in case you enjoyed it, please hit like, smash, subscribe. And don't forget, there is no one out there that's better than I am. My name is Nico Arachi, and I am #1.